Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for Singapore FinTech Festival coverage is Chong of Counsel, Simmons and Simmons to discuss key drivers in ESG from the regulatory perspective. Grace, it's great to meet you virtually. Welcome to Trade Talks.
Hi, Jill. Good to meet you.
What are some of the key regulatory trends for ESG in the asset management space?
Sure. So there are various developments which have set ESG as a central plank in developments in the financial services industry. So in the EU, for instance, there has been various focus on the disclosure regulations, and the disclosure regulations definitely has introduced a whole realm of new policies in relation to integration of sustainability within firms and various types of disclosure requirements in relation to policies and products. And you're also looking at various type of framework regulations and benchmark regulations over there in the EU, which are really affecting the asset management space. But over here in Asia, we are also seeing quite a lot shake up the ground. So for example, here in Singapore, we saw a consultation being launched in relation to the environmental risk management guidelines for banks, insurers, and asset managers. And also in Hong Kong, the Securities and Futures Commission recently also issued a consultation paper in relation to proposed requirements for climate-related risks for fund managers, and that is also getting quite a lot of attention in Hong Kong. So in short, I think there is quite a lot happening in this space which will warrant further attention in the asset management space, but also in terms of companies, there is also a lot of focus in the industry and a lot of pressure being driven from investors to enhance disclosure and also to look at climate-related risk as a tenet of risk management and enhance governance as well.
Grace, some investors are very skeptical about the efficacy or returns value of some ESG criteria. What are your views on this?
Yes, I think pretty much the reason for that is that certain types of factors can sometimes be longer run in nature. And so it is important to consider that certain types of ESG issues can be material over different time horizons. So for example, governance is often regarded as a key issue in Asia, but climate change and other issues like modern slavery are growing to be significant and important issues in the medium and longer term. So earlier on, when I referred to some of the developments globally, a lot of it is focused on climate change, but some of these issues are likely to be more relevant and more implicated in regulations in the longer term. So often investors may have to wait a while to reap the benefits of ESG integration, which makes the longer investment horizons and lower portfolio turnover more significant for ESG investing. But often I also hear from certain managers which explain that basically for certain types of strategies like quant trading or certain types of macro investing, they feel that certain types of climate-related factors may be less relevant to those aspects, and certain types of climate risk already being factored into equity trades. So I think there are different views on this in the market, and however, I think it's really hard to tell. So if you look at Wirecard, for instance, and if you crystallize and analyze the governance issues going on with the Wirecard debacle from an S&G perspective, arguably it was death by 1,000 cuts over a long drawn-out period, rather than one dramatic moment of a total destruction of value. So you really have to look at sustainability from a long-term perspective, rather than having perfect foresight over that situation.
And Grace, to wrap up here, what's the current state of play for ESG integration in Asia?
Yes. So I think in this regard, quite a lot of fund managers often share with me that they are having increased pressure from their investors and stakeholders to actually put ESG issues on the front of a lot of their strategies as well as policies, and how it affects their risk management policies and disclosures in this respect. But also, I think we are also seeing a greater interest from investors, even in Asia. So I think there has always been the perception that interest in ESG issues is a lot stronger in places like Europe. But I think this is really taking up in Asia, although there still continues to be a lot of concerns about issues like greenwashing, availability of data, availability of talent to actually deal with a lot of the resource management issues on which affects, of course, the transparency and integrity of a lot of the disclosure which is being put out by companies. So I think in terms of the integration by fund managers as well as the wider industry on ESG, I think this is something which needs further maturity, and I think quite a lot of factors in play are working on that. So I sit on some working groups which are working on several industry initiatives on this, and I think various aspects of the industry are all jointly seeing how best to actually look at helping various stakeholders in this journey towards better ESG integration.
Grace, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.